Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1225A, and today's date is March 10th, 2017, and the title of the episode is, It's Not Going to End Well. We are on the path to a collapse. Now, before I get started, I just want to make an announcement. I finished up an interview with Bix Weir, and he really broke down what is going to happen, what the experience is going to be like when this entire system is going to come down, and it's going to be up on the X22 Report Spotlight YouTube channel around 8:30 in the morning Eastern Standard Time. You can also come over to the X22report.com site or News Sentinel. All you have to do is scroll down, look over to your right-hand side. You will see the video there. I will also send the email out for those people who are on the email alert system. But this is one interview you need to listen to. He puts everything together, and it is following his Road to Ruta theory. So again, it will be up tomorrow morning, Saturday at 8:30 a.m. Eastern Standard Time. Let's get into the economic collapse financial news. Now, we've been looking at this economy for quite some time, and we tracked it, we've recorded it, we've delved into it, and we understand that this is one complete illusion. And the illusion is continuing. It has not stopped. Nothing's changed in the economy. A lot of promises were made. A lot of corporations out there telling you that things are going to be a lot better by them bringing jobs back, by bringing manufacturing back. But nothing's changed. And we're seeing what is happening around the world, and it's happening here in the United States. It's happening around the world all at the same time. Now, back in 2008, we saw the same thing, where there were bubbles, real estate bubbles, stock market bubbles, other type of bubbles around the world. I mean, no one really called attention to it. There were a certain few people that looked at all the information and said, well, there's a problem here. None of this stuff is real. It's an illusion. It's fake. I mean, the subprime securities, this is one gigantic lie. But again, the corporate media was out there telling you that everything was fine. It's not a lie. You're fake news. We're telling you the truth. It's AAA, Moody's, S&P. They told us it was. All these other people saying it wasn't, they're lying. And then we come to find out, no, it was the opposite way. They were right. And what we're seeing today is that other countries are having the same type of problems. Now, it might not be out in the corporate media, but we definitely see them. I mean, if we look at Australia, for instance, testifying before a parliamentary committee, the chief executive of National Australia Bank, Westpac Banking and Commonwealth Bank of Australia, all said that while they are worried about elements of the housing market, well, prices aren't overinflated. There are increasing risks, they said, but they believe that everything is fine, that nothing is overpriced. Well, when you really look at the housing market, it looks like it is overpriced. In Sydney, it's 100%. I mean, when we look down the list, Melbourne is around 90%. And this shows us that something is happening around the world. And it looks like all these countries, Canada, Australia, the UK, all of these areas are in the same type of housing bubble. And what they're saying is that they are seeing a huge number of foreign buyers who put their money down to buy apartments that are now having trouble settling. And that is creating a bit of a glut in supply. And when we look at this, we also see that credit extension, well, that has been tightening for apartment developers because they know that Australia will face a major oversupply of multi-unit dwellings over the next 1 to 3 years from the major ramp in permits over the past several years. And foreign buyers right now, well, they're kind of pulling out a little bit. So there's going to be problems there. Now, today in the United States, the job numbers came out. And Trump is patting himself on the back. Well, I brought manufacturing back, I brought construction back, but all the underlying economic data does not support any of this. I mean, for manufacturing, you have to have demand. I mean, we see retail closing. I mean, car sales are awful. I mean, they didn't build new plants. We're seeing Caterpillar's in trouble. They're laying off people. We just noticed that Ford laid off people. Who's hiring? And we also see construction workers. They've been added. Same thing. Construction spending way down. We see that Toll Brothers is saying that traffic is drying up. Sales are declining. And very interestingly, the wages are continually falling. So jobs are being added, wages are falling. It looks like we're back in that same illusionary manipulation we were at during the Obama reign. It looks like nothing has changed right now. So the stock market is being pumped up on nothing. It's not based on earnings. It's not based on profits. It's not based on sales. It's based on nothing at this point. When we look at the job numbers, they're completely manipulated from the beginning. I mean, they can't stop the manipulation at this point because all of a sudden we're going to go from 4.7% all the way up to 23%. Well, people are going to scratch their heads and say, why did that happen? And it looks like they're keeping the illusion alive. Now, the Fed, they're planning on an interest rate hike. And they're doing this into a weak economy. And we've seen this before in the past. Goldman right now, well, they just changed their forecast and said, oh, yes, we see hikes in March, June, and September now, which is an indicator that they're planning to really push this economy and bring it down, because we've seen this before and we know the results of it. Now, very interestingly, with the stock market, we are seeing corporate executives, they are buying their own firm shares at the slowest pace in at least 29 years. Now, just a couple of months ago, they were purchasing a lot of their own stock. And then we saw a drop off and we started to see them start to sell. Now, according to the Washington services, there were a total of 279 insider buyers in January, the lowest since 1988. Moreover, the number of sellers right now, they're growing in recent months, pushing the ratio of buyers to sellers in February to its lowest in 1988. And when we look at this, we can see they're unloading their shares right now. The smart money in finance, they're not buying the rally. They are selling to the retail investor. Retail investors right now, they are pouring money into the markets like it was 1999. And we've seen this before. This is a classic bubble. This is what happens. The insiders, they pump the market up and then they get out. They take their profits. The retail investor says, whoa, look at the market. It's going to keep going up. I'm going to get in now. I mean, we saw it not just in the stock market. We saw it in the real estate market back in 2008. When the real estate market was at its height, people were buying like crazy. And a couple of months later, the whole thing fell apart. Now, the average stock in the S&P 500 is down nearly 10% off its highs. Put another way, only a small group of stocks are holding up the entire market. Most companies are in fact already in correction mode. The number of S&P 500 companies, well, they're above their 50-day moving averages, and it has rolled over and is collapsing hard. Now, to put it simply, the internal momentum is quickly leaving the markets. And this is being confirmed by corporate insiders right now. And what we're seeing is this is what happens right before the system comes down. And what's very interesting, and I mentioned that I just got finished with an interview with Bix Weir, and he did mention something about taxes. during the interview. And, I thought about it, and I understand that tax receipts coming into the government has been declining. Now remember, they implemented FATCA, they implemented GATCA, where they went around the world looking for people's money to bring in for tax revenue. But I'm talking about the income tax of everyday working people. That has been declining. Now, when they lump it all together, they say, whoa, look, it's increasing. No, they went across the world because they knew the income tax here in the United States was declining, and they needed more revenue to bring into the government, to support the government. But Bix and I, when we were discussing what was going to happen here, he mentioned taxes. And he mentioned how there's not a lot of tax receipts coming in. And we will know on April 15th what that number is going to look like. Now, the Internal Revenue Service just reported exactly what he was talking about. And their report says that Americans are simply not filing their taxes in 2017. Now, we're officially halfway through 2017 tax filing season, and nearly 6 million fewer people have filed their returns than at the same point in 2016. That's an 8.5% decline. Now, that's very interesting. And there's different reasons for this. One, a lot of individuals, they were laid off and they're just not going to file because they don't have jobs. Another reason is because the call has been put out there to all those individuals that supported Hillary Clinton that they will not pay taxes under Trump. And they decided to all work together and not pay their taxes. Now, this is going to be a problem going forward. But we can see at this point that these pieces that we've been talking about, they're coming together. And we'll have to wait until April 15th because we know, first of all, on March 15th, the debt ceiling, that's when everything shuts down. We will know coming to April 15th how many people actually paid their tax receipts because that money is going to go into the coffers of the government. And they will use that to keep the government operational. And they will use also black money that they have in the stabilization fund to keep things running. Now, as we move towards May, like I said before, this will be a really good indicator of where we stand. And we see at this point that things are rapidly changing because on Friday, March 3rd of 2017, there was a surprise announcement about the London Bullion Market Association, the LBMA. It informed its members that the current administrator and calculation agent of its recently launched LBMA silver price auction, Thomson Reuters and the CME Group, they're going to be pulling out of providing their services to the London-based silver price benchmark. Now, this is very interesting. Are they getting out because they're worried about getting caught with fraud and manipulation? And we can see at this point that this might be the case and things might be changing rapidly at this point. Now, the Treasury is out there, and they are urging Congress to raise the U.S. debt limit to avoid a default. Now, of course, this is what the Treasury always does. And we know right now that Trump, he harshly criticized the previous administration for increasing the debt. So there's speculation right now that he is not going to do anything. Now, a lot of people are out there saying, he actually decreased the national debt by $70 billion since he was inaugurated. Now, remember, we have almost $20 trillion worth of debt. And since he did that, it went from $19.947 trillion to $19.879 trillion. But then he wanted $54 billion to spend on military, so he wanted to borrow those funds. So he cut different programs, and he's actually going to spend $54 billion. So was there really that much of a decrease? No. How much further is he going to decrease this? Most likely not that much further. Because all the programs, everything that's tied into all of this, well, he would have to get rid of quite a bit to reduce this debt, because the government employs a lot of individuals, has a lot of entitlement programs, and to keep the system going, it's quite a bit. It's almost like saying, okay, he reduced this by $70 billion. It's like someone who had $100,000 debt and said, you know something? I just got rid of $1,000 worth of debt. I'm better off now. No, you're not. Because if you're making the same amount of money, you're still in the same problem area here. Nothing's changed. I mean, that $1,000 is not even a little dent. And if the revenue coming into the government is continually dropping, this is going to be a major problem. And like I said, we are headed to a time period where this system is no longer going to function unless we make drastic changes. And when I say drastic, I mean cuts across the board. And this is going to be a complete disaster here in the U.S. I mean, just think about what would happen. And this is what we're talking about. We're talking about a collapse of the system. Because when this does happen, things are going to rapidly change. And we know that Trump has handled this before. He has handled a company that is so far into debt, the only alternative was to go bankrupt, to default. And most likely, we are heading towards a default. And we're going to have to watch this situation very carefully. Now, China is out there, and they're saying that the debt is too high because their estimates with GDP, their debt to GDP ratio, ranges from 250% to 300%. And we know that the credit impulse number has dropped below zero, where credit is going to freeze up. And that goes back to China. So when we look at all these different indicators, and when we look at what is coming up here, we need to be very careful in where we go and what we do at this point, because those people who have not been preparing, I would suggest you start to prepare. Those people who have been preparing, continue to prepare. As we approach May, the end of May, and there's still no debt increase, well, ramp your preparations up. Do not delay. Now, even if they raise the debt ceiling, we still have the same problem. Actually, they've just made it worse. That means we're going to be adding more debt, which means the situation is going to get even worse. So we're going to have to watch this situation. But in either case, the end game is exactly the same. It's a collapse of the system. Even if you had a business and you added on more debt, eventually you don't have the revenue to pay for it. So even if they raise the debt ceiling, the revenue coming in, there's not enough. If interest rates move up, as the Fed would like to do, guess what happens? They can't pay for it. They can't pay the payments each month. So the situation right now is pretty much the same. We're on a path to a collapse scenario. Get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.